Happy Thursday, everybody. This is your market update for November 9th, and the market has been pretty stable this week for the most part, and that's primarily because there hasn't been a whole lot of economic news coming out this week, especially compared to the last several weeks. Of course, we saw a great positive movement in both the stock market and the bond market last week, and the market this week is holding on to those gains for the most part. So I'll take stability all day long. It's nice to see. Mortgage-backed securities initially started off the day down 11 basis points, so down just slightly. Currently, last I looked a moment ago, was down 14 basis points. Still basically running into overhead resistance at the 100-day moving average, so trading between the 50-day moving average and the 100-day moving average. With some positive information, economic information or news coming out next week, potentially it could break through that 100-day moving average and move higher, which would, of course, lead to further improvement in mortgage rates, but we'll wait and see. I don't anticipate any movements higher or lower, basically where we're sitting right now. Stock market opened the day higher across the board, but just slightly higher, and since then has reversed course and sitting just slightly lower. Dow is down 29 points, NASDAQ is down 6 points, S&P 500 is down 2 points. We did see the initial jobless claims report come out earlier today, which was unemployment claims filed for the first time last week. And we did see, that number is still above 200,000. So that's over 200,000 people that filed unemployment claims for the first time as of last week. That number was just slightly lower than what the market was anticipating, about 1,000 claims lower. However, we did see that continuing claims, which are people that continue to file unemployment claims after they've initially started doing so, was higher than what the market anticipated. So that would support what we've said over the course of the last several weeks, that once people do lose their job, they're staying unemployed for longer. They're having a hard time finding another job, which would support a softening in the labor market. Freddie Mac published rates for 30 and 15-year fixed rate terms came out earlier today, and as expected, did show improvement. The 30-year dropped by almost, actually a little over 0.25%, currently sitting at about 7.5% nationally. The 15-year dropped 0.22%, currently sitting at about 6.81% nationally. Really, I think that's not taking into account some of the improvement that we've seen earlier this week. So I would say that rates actually got better by more than what's indicated in that report. But again, that's a survey that's taken on applications and information that Freddie Mac has obtained over the last week or so. So it's not always taking into account the most current information. With all that said, it's moving in the right direction. Hopefully it continues. No update tomorrow. It's Veterans Day. We thank you for our veterans for serving our great country. We appreciate all that you do for us and keeping us safe, laying your life on the line for us. But no update tomorrow due to the holiday. So I hope that you all have a great weekend, and I will see you next week.